In the world of finance, few rivalries have captured global attention quite like the ongoing battle between Bitcoin and Ethereum. It's more than just a debate over digital coins. It's a clash of ideologies, visions, and technological blueprints that could shape the very future of money. One promises to be the purest form of decentralized currency ever conceived, while the other seeks to be the foundation for an entirely new decentralized internet. Together, they account for the lion's share of the crypto market's total value. Yet they operate on fundamentally different principles. This is not just a fight for dominance in the crypto space, it's a contest to decide what the next era of financial infrastructure will look like. Bitcoin, launched in January 2009 by the mysterious Satoshi Nakamoto, emerged from the ashes of the 2008 global financial crisis. Its purpose was clear: create a peer-to-peer cash system that could bypass banks, governments, and central authorities. In its earliest days, Bitcoin was dismissed as a fringe experiment, useful mainly for tech hobbyists and libertarians who distrusted traditional finance. But beneath its modest beginnings lay a groundbreaking innovation: the blockchain, an immutable ledger that could record transactions transparently without a central authority. Ethereum, by contrast, entered the scene in 2015, founded by a then 21-year-old programmer named Vitalik Buterin. While inspired by Bitcoin, Ethereum's vision was far more expansive. Instead of focusing solely on digital money, Ethereum aimed to become a platform for decentralized applications, where smart contracts, self-executing code, could automate agreements without intermediaries. If Bitcoin was digital gold, Ethereum was designed to be a global computer. This distinction would define their rivalry from day one. To understand the significance of this competition, it's important to note that Bitcoin and Ethereum don't just differ in purpose. They differ in design, culture, and even philosophy. Bitcoin's community prides itself on stability, security, and scarcity. Its supply is capped at 21 million coins, a built-in feature that mirrors the finite nature of gold. Ethereum's community, on the other hand, embraces innovation and rapid development. It has no fixed supply cap, instead adjusting its monetary policy as needed to support the network's growth and sustainability. This divergence has led to a fascinating dynamic. Bitcoin's blockchain is deliberately slow and simple, processing around 7 transactions per second. This pace ensures maximum security but limits scalability. Ethereum's blockchain, while slower than traditional payment processors, handles far more complex operations thanks to its ability to execute smart contracts. It can support decentralized finance platforms, NFT marketplaces, gaming economies, and much more. Imagine two rival cities. Bitcoin is the ancient fortress built with unbreachable walls, offering safety and stability to its citizens. Ethereum is the sprawling metropolis, constantly under construction, filled with innovation but also prone to traffic jams and growing pains. Both cities attract people for different reasons, and both face unique challenges. From an investment standpoint, Bitcoin is often viewed as a store of value, a hedge against inflation, and a safe haven in uncertain times. Institutional investors, hedge funds, and even governments have begun adding Bitcoin to their reserves. Ethereum, while also valuable as an asset, is more closely tied to its utility. Holding Ethereum often means you're also participating in its ecosystem, paying for transactions, interacting with decentralized apps, and engaging with emerging technologies. This difference in utility has shaped public perception. For many newcomers, Bitcoin is the gateway into crypto, the brand they've heard about in headlines. Ethereum, while well-known, often requires a deeper dive to fully grasp its potential. And yet, some argue that Ethereum's broad range of applications gives it more long-term upside than Bitcoin's singular focus. If this comparison is interesting, hit that like button. It helps us reach more curious minds who want to explore the truth behind the crypto headlines. The rivalry has also played out in price movements. Historically, Bitcoin has led the market, with Ethereum following its trends. However, there have been moments when Ethereum's growth outpaced Bitcoin's, especially during surges in decentralized finance or NFT adoption. This ebb and flow of dominance has led some analysts to speculate about a flippening the day when Ethereum's market cap might surpass Bitcoin's. It hasn't happened yet, but the very idea fuels debate across the crypto world. Even in their earliest years, the philosophies of the two networks shaped their communities in different ways. Bitcoiners tend to focus on the purity of decentralization and the resilience of the protocol. Changes to Bitcoin's code are rare and subject to intense scrutiny. Ethereum's developers, on the other hand, push frequent upgrades to improve scalability, efficiency, and security, even if it means taking bigger risks. And yet, despite their differences, the two are not enemies in the truest sense. Many investors hold both. Many developers respect the strengths of each. But make no mistake, in the race to shape the future of money and technology, their paths will continue to intersect and sometimes collide. The real question is, will the market ultimately crown one as the clear leader, or will these two giants learn to coexist in a shared digital economy? That's what we'll begin to uncover in the next part, as we break down the technical strengths and weaknesses that could determine the outcome of this battle for crypto supremacy. When comparing Bitcoin and Ethereum from a purely technical standpoint, the contrast becomes even sharper. Each network is a masterpiece of engineering in its own way, but the priorities behind their designs differ so drastically that they almost feel like products of two different worlds. These differences are not cosmetic. They influence everything from transaction speed to network security, and even the way communities view their future. Bitcoin's architecture is intentionally minimalistic. Its scripting language is limited, keeping the blockchain's primary function focused on recording transactions. This narrow scope means there are fewer vulnerabilities to exploit, contributing to Bitcoin's legendary security record. Since its launch in 2009, no one has ever successfully compromised the Bitcoin blockchain itself. Attacks have targeted exchanges and wallets, but the core protocol remains untouched. This robustness is part of what makes Bitcoin the most trusted digital asset in the eyes of institutional investors. Ethereum, on the other hand, was designed with flexibility at its core. Its Turing-complete programming language allows developers to build almost anything they can imagine, from decentralized finance platforms to complex games. While this flexibility has fueled incredible innovation, it also opens more attack surfaces. Bugs in smart contract code, for instance, have led to high-profile exploits costing millions. This is not necessarily a flaw in Ethereum itself, but rather a trade-off. Innovation invites complexity, and complexity invites risk. One of the clearest technical differences between the two is their consensus mechanisms, the method by which transactions are verified and added to the blockchain. For most of its history, both Bitcoin and Ethereum used proof of work, where miners solve cryptographic puzzles to validate transactions. This method is extremely secure but consumes vast amounts of energy. Critics have often pointed to Bitcoin's energy use as a drawback, although supporters argue that much of this energy comes from renewable sources and that security is worth the cost. Ethereum, however, made a historic shift in 2022 with the merge, transitioning from proof of work to proof of stake. Instead of relying on miners, Ethereum now depends on validators who lock up or stake their ETH to secure the network. This change reduced Ethereum's energy consumption by more than 99% and made it more scalable in the long run. Yet, it also sparked debate about whether proof-of-stake networks are more prone to centralization, as large holders can exert more influence over the system. In terms of scalability, neither network has fully solved the issue of high transaction fees and slow speeds during peak demand. Bitcoin's solution comes in the form of the Lightning Network, a second-layer protocol that processes transactions off-chain before settling them on the blockchain. This allows for near-instant low-cost payments while preserving Bitcoin's security model. However, adoption of Lightning has been gradual, and its use is still far from mainstream. Ethereum is tackling scalability through multiple paths. One is the introduction of sharding, a method of splitting the blockchain into smaller parts to process transactions in parallel. Another is the rise of Layer 2 solutions like Optimism and Arbitrum, which batch multiple transactions off-chain before recording them on Ethereum's mainnet. These solutions have already brought down costs for many users, but Ethereum's full scalability vision is still a work in progress. Network stability is another factor where the two differ. Bitcoin's core code changes slowly, and upgrades are rare but thoroughly tested. Ethereum's upgrade schedule is more aggressive, introducing new features and optimizations regularly. This agility allows Ethereum to adapt quickly to user demands, but sometimes creates short-term instability or unexpected outcomes. From a security perspective, Bitcoin's smaller attack surface and slow-moving development cycle give it a defensive edge. Ethereum's constant innovation, while exciting, means developers and auditors must remain vigilant to keep vulnerabilities in check. Neither network is unsafe, but their approaches to risk management reflect their broader philosophies. One, prioritizing immutability, the other, embracing evolution. This technical tug-of-war has a psychological effect on their communities as well. Bitcoiners often see their blockchain as the final form, perfected for its purpose and in little need of change. Ethereum's supporters view their platform as a living organism, always growing and adapting to meet new challenges. It's a mindset that shapes how each side talks about the future and how willing they are to accept radical changes. If you've been following along, share your thoughts in the comments. Your perspective matters. Which approach do you think is better for long-term survival, the fortress or the evolving city? And here's the twist. These technical differences don't exist in a vacuum. They directly influence adoption, use cases, and even the way each asset is positioned in the eyes of investors and governments. In the next part, we'll explore how Bitcoin and Ethereum are actually being used today, who's adopting them, and what their real-world impact tells us about their potential future. While technical strengths and weaknesses shape the foundation of Bitcoin and Ethereum, adoption tells the real story of their influence. A blockchain can be an engineering marvel, but without real-world usage, it risks becoming a technological curiosity rather than a financial revolution. And here, the paths of Bitcoin and Ethereum diverge just as sharply as their designs. Bitcoin has carved its place as the world's first truly decentralized currency. Its most prominent role is as a store of value. The so-called digital gold, this narrative has grown stronger over the years, especially during periods of economic instability. In countries experiencing hyperinflation like Venezuela and Zimbabwe, Bitcoin has become a lifeline for citizens seeking to protect their savings from collapsing national currencies. On a larger scale, some institutional players, including publicly traded companies, have begun adding Bitcoin to their balance sheets as a hedge against inflation and currency devaluation. In 2021, El Salvador made history by becoming the first country to adopt Bitcoin as legal tender. The move was bold and controversial, with supporters calling it a visionary step toward monetary independence and critics warning of volatility risks. While the rollout has faced challenges, including public skepticism and slow merchant adoption, it marked a turning point in Bitcoin's perception, from a speculative asset to a potential national currency. Ethereum's adoption story, however, is more about function than symbolism. Its true power lies in being the backbone of decentralized finance. Billions of dollars flow through Ethereum-based protocols that allow users to lend, borrow, trade, and earn interest, all without relying on traditional banks. The explosion of non-fungible tokens, NFTs, also began on Ethereum, transforming the art, music, and gaming industries. Projects like OpenSea, Uniswap, and AB have become household names in the crypto world, all running on Ethereum's infrastructure. Another area where Ethereum shines is in providing a platform for decentralized autonomous organizations, DAOs, community-governed entities that operate transparently on the blockchain. From managing investment funds to running social clubs, DAOs are redefining what organizations can look like in the digital age. And while these concepts are still evolving, they highlight Ethereum's versatility in supporting experiments that extend far beyond currency. Yet, adoption is not without hurdles. Bitcoin, as limited transaction speed and high fees during network congestion, make it less practical for everyday purchases, especially when compared to traditional payment networks like Visa or MasterCard. Lightning Network adoption is growing, but it still has a long way to go before it can compete at scale. Ethereum faces similar challenges, particularly with high gas fees during peak usage. Layer 2 scaling solutions are helping, but the user experience can still be intimidating for newcomers. Government attitudes toward adoption are equally important. Bitcoin is generally seen by regulators as a commodity similar to gold. This status gives it a degree of legal clarity in many jurisdictions, but also leaves it open to taxation and trading restrictions. Ethereum's position is more complex. Its initial coin offering in 2014 has led some to question whether it should be classified as a security. While no definitive global ruling has been made, the debate creates a layer of uncertainty that could influence institutional adoption. Corporate adoption also reveals a lot about each network's trajectory. Companies like Tesla and Square Now Block have bought Bitcoin as part of their treasury strategy. Meanwhile, major tech firms and financial institutions are experimenting with Ethereum-based solutions. JP Morgan's Quorum blockchain, for instance, is built on Ethereum technology, showing that even traditional banking giants see value in its infrastructure. If this exploration of adoption and use cases has you thinking, subscribe to stay updated on future deep dives. We're just scratching the surface of how these networks might evolve. Looking ahead, both Bitcoin and Ethereum face critical questions about scalability, regulation, and market competition. Will Bitcoin maintain its dominance as a store of value, or will faster and cheaper alternatives chip away at its market share? Will Ethereum remain the leading smart contract platform, or will rival blockchains like Solana, Avalanche, or Cardano catch up? In the next part, we'll take a hard look at the risks and opportunities facing both Bitcoin and Ethereum, exploring how these factors could either propel them to new heights or threaten their positions entirely. Every great rivalry carries with it not just the potential for triumph, but also the possibility of failure. For all their strengths, Bitcoin and Ethereum face real challenges that could alter their trajectories in ways even their most devoted supporters might not expect. Understanding these risks is essential for anyone following or investing in this battle for crypto supremacy. Bitcoin's greatest strength, its stability, can also be a weakness. By resisting change, the network protects its integrity, but it also limits its adaptability. If faster, more energy-efficient alternatives become widely accepted, Bitcoin could lose relevance among new generations of users. Environmental criticism is another persistent challenge. While mining has increasingly shifted toward renewable energy, the perception of Bitcoin as an energy-hungry asset still influences public opinion and policymaker agendas. Ethereum's biggest risk is complexity. Its constant evolution, while innovative, increases the risk of technical bugs, smart contract exploits, and governance disputes. The shift to proof-of-stake was a monumental achievement, but it has yet to be fully tested under extreme global conditions. Centralization concerns also remain, with large stakers potentially holding disproportionate influence over network decisions. Regulatory pressure looms over both. Governments worldwide are still figuring out how to handle cryptocurrencies, and policies could change quickly. A sweeping ban, a new tax regime, or a reclassification of Ethereum as a security could send shockwaves through the market. On the flip side, favorable regulation could act as a springboard, boosting institutional adoption and legitimizing the industry further. Competition is another wild card. While Bitcoin and Ethereum dominate today, the crypto space moves at breakneck speed. Blockchains like Solana, Avalanche, and Polkadot are constantly improving and could attract developers and investors away from Ethereum. Likewise, new forms of digital assets, such as central bank digital currencies, CBDCs, could compete with Bitcoin's role as a store of value, especially if they offer stability and fast settlement. Yet within these risks lie immense opportunities. Bitcoin, with its unmatched brand recognition and first-mover advantage, could cement itself as the universal reserve asset for the digital age, a base layer of trust that underpins a multi-chain, interconnected world. Its scarcity and security model give it a unique position that no copycat has successfully replicated. Ethereum's opportunity lies in its versatility. If it can scale efficiently and maintain security, it could remain the primary settlement layer for decentralized applications, finance, and emerging Web3 technologies. Its ability to adapt means it can integrate with new innovations far more easily than Bitcoin. The network effect of thousands of developers building on Ethereum gives it a strong defense against rivals. Ultimately, whether one wins or they coexist may not be the right way to frame the future. Bitcoin and Ethereum could each dominate their respective niches, serving different purposes in a larger decentralized ecosystem. Bitcoin as the uncompromising digital store of value. Ethereum as the dynamic platform for building the decentralized internet. The story is still being written. If this journey through their rivalry has sparked new thoughts, hit that like button. It tells us you value deep, thoughtful analysis. Share your take in the comments. Can there truly be one winner, or is the future multi-chain? Your perspective matters. And if you want to keep unlocking the truth behind the biggest financial and technological shifts of our time, subscribe to Wealth Unlocked. Every week, we dive into the forces reshaping money, markets, and the digital economy with the clarity and depth you won't find in the headlines. Like, subscribe, and let's keep exploring the future together.